If you had all of the money in the world, what would you do to hold on to that power?
What we're trying to do with crypto is make it more democratized with all of crypto and making it much cheaper for investors. Right now, the bid-ask spread for crypto is very expensive. It does erode a lot of the returns that you speak about because it costs a lot of money right now to transact Bitcoin, and it costs a lot of money to get out of that. And so we hope our regulators look at these filings as a way to democratize crypto, and we'll see in the future how that plays out.
Wall Street, the center of free market capitalism. At least that's what they tell us. But what if I told you there's nothing free about this market? That one man and the mega company he built are so powerful, they basically control the entire world. Larry Fink, the founder and CEO of BlackRock, a man who came from nothing and shot to the heights of power that would make Napoleon blush. The type of power that's never been seen before in American democracy. But how did Fink do it? How did the purported son of a shoe salesman transform himself into a Davos-attending, market-controlling kingmaker? This investigation is going to lead us in a new series of videos where we dive deep into the issues that impact your life and your investing choices. So if you appreciate us leveling up our game, destroy that like button, subscribe, and share this video with someone who needs to know about the truth of Larry Fink. And now a little bit more about BlackRock. BlackRock describes itself as the world's premier asset management firm and a premier provider of investment management. This means they invest money for others, whether that's wealthy individuals or large funds like pensions, corporations, and even governments. They also have a fleet of ETFs that anyone can add to their investment portfolio. You may have heard that they recently launched a Bitcoin ETF. Then out of nowhere, the price mysteriously sunk so they could pick up some more at a discount. It's estimated that BlackRock, Vanguard, and State Street manage somewhere between 73 and 80% of the global ETF market. At the end of 2023, BlackRock had almost $10 trillion worth of assets under management and brought in $5.5 billion net income. Between BlackRock's and Larry Fink's power, they have grown to such an unfathomable level of influence that monopoly watchdog groups are now calling for it to be broken up. Saying their web of connections and influence means that it is likely that BlackRock has touched the lives of most Americans in one way or another. We'll get more into the extent of that power in a little bit. But what's weird about BlackRock in comparison with other financial institutions is that it's kind of the new kid on the block. State Street was founded in 1792, and Fidelity was founded in the 40s. And most of the big banks came out in the 1800s. Well, it all comes down to the man who some describe as an investing genius, and others paint as a ruthless and paranoid dictator, all while he presents himself as just another average nice guy.
I'm projecting hope.
Larry for president? I don't know.
No, I'm too young.
Why would this guy ever run for president when he controls everything anyway? You can't truly understand BlackRock without knowing the story of the man who created it all. And in this video, we're going to be digging into the history of Larry Fink and try to uncover that very truth, at least as much as we can. When a single man and his friends control majority shares in almost every company that would be reporting the truth, facts become, well, evasive. And that's exactly why we need to read between the lines. It's time to discover truth. Fink was born in a sleepy small town of California Valley called Van Nuys in 1952. His mother, Lila, was a teacher and his father, Fred, was a shoe salesman, at least according to Larry. However, there is no known records of a shoe store registered to Fred or Lila Fink in Van Nuys at the time between 1940 and 1960. In fact, the entire internet was scrubbed of information about Fink's family until very recently. Now, internet detectives stayed on the case, and it turns out Fink's family members can now be found at the highest corporate levels, working in anything from big pharma to hedge funds to charter schools with financial brokers like the Rockefellers, Michael Milken, and Larry Ellison of Oracle. So did Larry have such humble beginnings? Well, we'll probably never know. But you won't be surprised that accounts of Fink's childhood differ. Sometimes he's described as the underachieving younger sibling forced to work in his family's father's shoe store. And other times, he's a boy genius who knew everything would skyrocket to the top. Either way, Fink didn't go far from home when he got his undergrad and business degree from UCLA. After that, Fink did some time at a real estate company before heading to Wall Street. Once again, Fink crafts his narrative depending on the audience. He either aimlessly floated to Wall Street with the hopes of making it rich, but botched most of his interview and finally landed at his backup, First Boston. Or others describe a journey of having his pick of the litter and turning down many offers in favor of the smaller firm. So why is it that some people just paint him as some foolish child, while Wall Street depicts him as the chosen one? Well, that's for you to decide. Because Fink didn't waste any time racing to the top. He was running First Boston's bond department only 2 years out of grad school, making him the youngest member of the management committee at just 31 years old. Now, I'm sure Fink was a good bond trader. After all, he supposedly added $1 billion to the company's balance sheet, but he was trading mortgage-backed securities during a time when banks and investment firms were so rabidly hungry for them that they were giving out home loans like doctors gave out antibiotics. More on this later. But moving up that quickly in a traditional company takes the kind of political acumen we typically see in movies like Catch Me If You Can and The Dropout. Get what I'm saying? But then Fink got cocky. In 1986, interest rates crashed and he got a dose of humility, losing $100 million of First Boston's money. Because of this, they parted ways, and a couple of years later, Fink starts the company that would later become BlackRock. Now, what's interesting here is Fink insists he left First Boston on his own accord, citing First Boston's allegedly poor risk management strategies as the reason he lost the $100 million. However, it also became his inspiration for BlackRock's bespoke risk management software, Aladdin. At the same time, First Boston experienced a hostile takeover from Credit Suisse about the time of Fink's departure. So this version of the story paints Fink as a visionary with an ear to the ground who got out of a flailing company just in the nick of time. However, First Boston very publicly stated that Fink was let go, saying he did not have the option of staying in his current job. Yikes. Now $100 million is a big chunk of money. But if Fink really added $1 billion to their balance sheet, would he go from golden boy to persona non grata so quickly? Or did Fink Boston realize Fink had sold them a bill of goods? Whichever story you believe, the guy can network. Ken Wilson, Fink's longtime friend and a former senior Treasury official and Goldman Sachs partner, praised Fink's tremendous ability to network, that he is always getting information. By this account, he sounds a bit like a Wall Street gossip, and his networking saved him after First Boston threw him out. Fink leveraged his budding friendship with Ralph Schlosstein of Shearson Lehman to build the company that would later become BlackRock.
So you just wanted to go straight to the top?
Kind of, yes. Why waste my time? Just knowing the people who were at the top, they just, I don't know.
Sorry, knowing the people at the top.
Yeah, it's like they did not strike me as too smart or like too talented, so I felt like, why?
Excited by their new venture, Schlosstein and Fink convinced several people from their previous companies to come with them. That meant that they needed office space and funding. So Fink gets in touch with Steve Schwarzman and Pete Peterson of Blackstone, not to be confused with BlackRock. Blackstone was so impressed by Fink's pitch, they offer him office space and a $5 million loan in exchange for a 50% stake in Fink's new company. Fink and Schlostein's company starts out being called Blackstone Financial Management, or BFM, a fixed income fund and supporting software service for hire. In 6 months, BFM was managing $23 billion and had grown to 150 employees. During this period of rapid growth, Fink was luring new BFM employees by offering them stakes in the company, which meant he was diluting Blackstone's stake in the company. Basically, he was promising the same money to multiple people.
Fugazi, fugazi, it's a wazzy, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not real.
This led to the separation between Blackstone and BFM, which then changed its name to BlackRock, tickling the pride of both Peterson and Schwarzman, while also confusing the American people for the rest of time. You see, Blackstone went on to sell its stake in BlackRock to PNC Bank for $240 million in 1994. And PNC subsequently folds into BlackRock just in time for BlackRock to get listed on the NASDAQ in 1999. At this point, Fink's pride is tested again when Merrill Lynch undervalues his company at $900 million. But the CEO, David Komansky, urged Fink to still go through with the IPO, which was good timing because the dot-com bubble was about to burst. And BlackRock was going to be there to pick up all the pieces.
Investigating whether the go-go markets of recent years
were steeped not just in excessive speculation, but fraud. Whether investment bankers and brokerage houses concealed conflicts of interest and deliberately manipulated stock prices.
Now, there's no way to prove Larry Fink is the boogeyman behind all of America's woes. But it is safe to say that venture capitalists like Fink are largely responsible for the dot-com bubble itself and the fact that it bursted. They bid the stocks up to whatever Harvard Business Review calls irrational and unsustainable levels, and then shorted it as it came crashing down. They made money while people's lives were ruined. And when the market shakeup happened, investors fled to safer bets, which included, of course, BlackRock's famous risk management solutions and their bonds. Now, BlackRock shares went from $14 to over $200 in the next 10 years. Now, I know this doesn't sound like the kind of gains that we make in crypto, but for traditional stocks, that's impressive growth. These gains allowed BlackRock to borrow against its shares, spending the next few years in an acquisition frenzy. This would transform the company from a bond investment house to the world's largest asset management firm. This is where Fink gained all of his power. In 2004, BlackRock bought State Street Research. 2 years later, they acquired Merrill Lynch's money management arm, skyrocketing BlackRock's assets under management to over $1 trillion. Now, I'm sure Fink was all too happy to make that call back to David Kamansky, who first originally undervalued BlackRock's IPO. Because that same year, BlackRock would go on to do $5.4 billion in a purchase of a Manhattan housing complex called Stuyvesant. But this would become the largest residential real estate deal in US history up to that point. And these company takeovers continue to this day. BlackRock has now acquired 23 companies so far as the time of this recording. Now, one former executive of Barclays Global Investors, which BlackRock bought in 2009, described Fink's method for gobbling up companies as an extraordinary exercise in the Machiavellian method. Acting as the prince, Fink needed all of the barons to commit to total loyalty, and basically killed off all of the barons that wouldn't do so. So this is what we know about Larry Fink so far. He worked, or conned, his way to the top of First Boston. And when he was found out, he blamed everyone else for his failures and convinced people to invest in him and help him build a company. And as BlackRock grew exponentially, Fink systematically took out anyone who would question him. It's no coincidence one anonymous friend said Fink was obsessive and paranoid about maintaining control. And Fink was about to take his big deception to the next level. Because the housing market was going to crash, and he was going to convince the US government to put him in charge of trillions of dollars in toxic assets.
Looks like the collapse of the financial sector is imminent. I start to sell my position. It's $1.3 billion. Sure.
National Association of Realtors reported the worst month-to-month drop in existing home sales since they started keeping track in the late 90s. And compared to last year, closings are down more than 25%.
Excuse me, sir. How are you feeling?
How do you think?
What we know now is Wall Street can bring down Main Street. And frankly, I'm going to tell you, it's a little scary.
Your company is now bankrupt. Our economy is in a state of crisis.
Did you mislead your investors? And I remind you, sir, you're under oath.
The 2008 housing collapse. A financial trauma that seared into our collective memory. I don't have to tell you how many people's lives were ruined by the unregulated Wall Street speculation on mortgages. Oh, and no one responsible has gone to jail. So there's that. As people were losing their homes and getting to know what a true recession feels like, Larry Fink was secretly at the center of it all, playing puppet master with the disgraced companies. And funnily enough, just a year before, Fink had downplayed the severity of the mortgage-backed securities crisis. He told the Financial Times the market was under a lot of stress, but he didn't see it escalating into something meaningful and more destructive to the overall housing market. And while he assured the world of the robust nature of the housing market, BlackRock was getting out of their positions in subprime mortgage-backed securities. They were completely out of the market just 3 years before the collapse. Although BlackRock defaulted on the Stuyvesant Town Peter Cooper Village property, which ironically Blackstone bought 10 years later, they were kept afloat by purchases of their risk management solution, Aladdin. So when every major financial institution was in danger of shuttering their doors, BlackRock looked like the golden child. The juicy government contracts they were about to win didn't hurt their bottom line either. You may remember Larry Fink started out as a mortgage-backed securities trader at First Boston. So if you think about it, all his success in his career is linked to the very thing that crashed the market. It seems like Fink has a habit of creating problems that he then magically fixes. And yet no one holds him accountable for the harm he causes. Fink also has a habit of assuring the public of one reality while his company does the exact opposite. And don't think for a second this is a mistake. Those close to Larry Fink have expressed just how cautious he is with every word that comes out of his mouth. You may recognize this strategy from Fink's statements on crypto. Now this next part gets even more mysterious than the rest of Larry Fink's story. For some reason, BlackRock received several government contracts to help the US Treasury and Federal Reserve analyze the securities that brought about the financial crisis. BlackRock oversaw $130 billion worth of toxic assets. And not only that, but they were central to the fate of several troubled, too big to fail companies. BlackRock got access to Fannie Mae and Freddie Mac's balance sheets, overseeing their rescue plans. And then Fink advised on several big deals, including the sale of Bear Stearns to JP Morgan, the $180 billion bailout of AIG, and the $45 billion bailout of Citigroup. And the reason BlackRock's role in the 2008 financial cleanup is so mysterious is there was no competitive bidding for these government contracts. The Fed simply handed Fink the future of worldwide finance and said, do with this what you will. And while Fink was playing Wall Street kingmaker, his buddies at Blackstone were keen to jump in and buy up all of the foreclosed homes. So if you're ever wondering why the Obama administration didn't give all that bailout money to regular Americans, you can thank Larry Fink and the Federal Reserve for hiring BlackRock without even considering alternatives. And the government contracts, well, they did not stop there. At least for Fink and BlackRock. They saw another opportunity to rake in profits during the COVID pandemic 10 years later.
Good afternoon, and we're coming on the air at this hour with breaking news, concerns over the coronavirus outbreak, and once again, they are affecting the stock market. Look at that right there. Wall Street ending one of the worst weeks of trading since the financial crisis in 2008.
In March 2020, the Trump administration and Fed chose BlackRock to purchase government bonds to provide COVID financial stimulus. Bloomberg estimated BlackRock earned $48 million a year in fees for these contracts. Not to mention all the great insider information that comes along with being buddy-buddy with Uncle Sam. In 2020, when people were losing their jobs and threatened with eviction, BlackRock's revenue was over $16 billion. In the following year, that increased by 20%. On top of all these juicy fees from the government and whatever financial benefit BlackRock received from buying those bonds, which we probably won't even understand for years to come, BlackRock has huge investments in companies that made a killing during the lockdowns. They made billions from holding stocks like Amazon, FedEx, and UPS. So you may be thinking, okay, but this is capitalism. Survival of the fittest. And Larry Fink clawed his way back to the top. BlackRock alone holds an 8% stake in Pfizer, 7% in Moderna, and a 7.6% in Johnson & Johnson. No matter what you think about vaccines, Big Pharma is bad enough without being under the yoke of Larry Fink. I'm a big fan of capitalism. I'm a capitalist. But I don't want one man in charge of the health of decisions of our nation. I seriously wish I had been in that room. I wish I'd been there when Larry Fink convinced the Fed to trust him with all of those assets. I wish I'd been there when the Fed came crawling back in 2020, hoping Fink would take pity on them. But we'll never know how Larry Fink created a persona of advisor to all of Wall Street. One associated posited that because BlackRock only invested their clients' money and not their own, that Larry Fink came to be somehow known as unbiased. Now, I don't buy that for a second. I think Larry Fink is in the business of seizing as much wealth and power for himself as possible, while maintaining a relatively low official net worth, so he flies under the radar, and through the shadows of the world's richest people. Larry Fink seems to be whoever people want him to be, and he hoards information about people and companies that he can use to his own advantage. It's not an overstatement to say that the kind of power Larry Fink and BlackRock yield are a threat to humanity and straight up world finance. And people are finally starting to wake up.
BlackRock gonna turn us around!
Hatred for Larry Fink and BlackRock have never been higher. Before social media and information sharing, BlackRock was pretty much able to hide in the shadows. But with worldwide protests now, literally at their offices, and even black trucks with Larry Fink's image driving through the streets of New York, all to educate people on who he really is, the information is starting to get out there. And that information is that he's the man behind the curtain. In 2018, billionaire businessman Sam Zell, who has the kind of money that allows him to say what he wants, when he wants, said, "I didn't know Larry Fink had been made God. I just wondered whether America is really ready for Vanguard and BlackRock to control the New York Stock Exchange, because that's what's happening." And that's when Fink's PR strategy changed. He started cracking jokes in interviews and even participated in a half-hearted Economist piece, where he paraded a journalist around in a golf cart. He wore a polo shirt so you just think he would be an average Joe. But it isn't working. People are waking up to the fact that this system is rigged. Middle and lower income Americans are hurting. They're looking for someone to blame, and they're worried about elites wielding way too much power. And they should be. Since the financial crisis BlackRock has so entrenched itself into, especially with the United States government, some would say they're one of the same. During the last election in 2020, BlackRock contributed almost $1.4 million to Democrats and over $700,000 to Republicans. And that's just the amount that's publicly available. We have no idea how many super PACs BlackRock is behind or how many legal bribes they've offered our leaders. But campaign contributions aren't even the most effective method of digging their claws into our government. There is a revolving door of employment between BlackRock and our US government. Former BlackRock investment executive Brian Deese leads Biden's National Economic Council. Larry Fink's former chief of staff, he has a chief of staff like the freaking president or king, became a top official at the Treasury Department. Michael Pyle was a global chief investment strategist at BlackRock in between his time in the cabinets of none other than Obama and VP Harris. Dahlia Bass of the SEC made a move to BlackRock in 2020. And the list goes on and on. And that's just American officials. I'm sure BlackRock has its hooks into foreign governments as well. Now, I mentioned this briefly before, but BlackRock controls an extraordinary amount of voting power across public US companies. In 2020, a watchdog group estimated BlackRock had at least 5% of the voting power in 97.5% of the companies in the S&P 500 alone. Between BlackRock, Vanguard, and State Street alone, they control nearly a quarter of the votes cast across most publicly traded companies. And with the way things are going, academics estimate that the power could grow to over 40% over the next 2 decades. That means the companies from which you're buying groceries, receiving healthcare, and purchasing a home really don't have your best interest at heart. They're operating in the service and desires of the government and these corporations.
I think it's tough, but maybe...
Roman for me.
I'm not sure we can count that for you.
Roman.
Against.
He started to vote. I'm not sure that he can change
He
that.
can't f***ing change.
You shouldn't be here. You shouldn't be speaking here. You should be out of this room. This is illegal.
Whatever.
Do you ever wonder why we spend so much money on wars and not our citizens? Well, that's nowhere near as attractive as boosting BlackRock's investments in the military-industrial complex, which currently are valued at over $64 billion. And if that kind of voting power and governmental control isn't scary enough for you, think about BlackRock's silent method of dominating the world. Its risk management software, Aladdin, yeah, the one we mentioned earlier, manages over $20 trillion of capital. Vanguard and State Street Global Advisors are both users of Aladdin. Japan's government pension fund and the corporate treasuries of the 3 largest publicly traded companies in the US, Apple, Microsoft, and Google's parent firm Alphabet, well, of course, all use Aladdin. Again, this is $21 trillion we're talking about. This means most financial institutions are making the exact same investing decisions. The same investing decisions BlackRock is making, creating a self-fulfilling prophecy to BlackRock's benefit. And what's worse, BlackRock knows what people are going to do before they do it. Well, remember when BlackRock conveniently got out of the mortgage-backed securities in 2005, right before the housing meltdown? Well, they can get out of the future toxic assets before the news hits and smiles as everyone else loses. So pay close attention. Because as of right now, Larry Fink and BlackRock have set their sights on crypto, ruling out the fact that traditional finance and the government wasn't enough for them. They need to control our blockchains as well. Fink went from calling Bitcoin a haven for money laundering.
Most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world, how much people are trying to move currencies from one place to another.
And trying to bill Aladdin as blockchain.
I believe in blockchains. We're looking at many blockchains. We created provider Aladdin, which is really a blockchain between us and our clients.
But that's the underlying technology.
But it's a private blockchain, okay? But that's we believe we can create more and more flow through information by having all the different reference points of a transaction being systematized. That's good.
To describe Bitcoin as a flight to quality and a hedge against inflation.
It is a asset class that protects you. Right. And unlike gold, where we manufacture new gold, we're almost at the ceiling of the amount of Bitcoin that'd be created.
Did he really become a Bitcoin bull after years of naysaying? Or was it BlackRock secretly buying and using his statements to crash the market for cheaper prices? Current estimates have BlackRock, Vanguard, and State Street controlling 1 or 2% of all Bitcoin. And of course, this number will only go up as the ETFs gain popularity and mass adoption. In fact, by the time you're watching this, it could already be at 10%. But it's not only the large amount of Bitcoin they hold that's worrisome. When BlackRock brings its influence into our space, intense market manipulation occurs. During the last bull run, when Elon Musk and Tesla sold and the market crashed, Cathie Woods expressed frustration over Tesla selling so much Bitcoin. Quoting, "Elon probably got a few calls from institutions. I'm sure BlackRock registered some complaints. When Larry Fink and his cronies can make a call and cause a crash like that, they have too much power. Look at the correction we've experienced after the ETFs were approved. Most people were prepared for the price of Bitcoin to skyrocket, and what did they do? It fell, creating the perfect opportunity for BlackRock and other major institutions to buy at a discount. And this is why it's so important to hodl. Yes, take profits. So of course you can buy the dips and get that generational wealth. Please don't run for the hills and sell scared right into the hands of BlackRock. The Larry Fink story is the story of a man who concealed his past for his own gain, spinning his blunders into a $1 trillion company. He kept his ear to the ground, greasing wheels and collecting information, potentially even blackmail, so that when the moment was right, he could transfer himself and BlackRock into the saviors of the Great Recession. And after bleeding the American people dry through fees and bailouts, that really only benefited his cronies. He turned that wealth and influence into the most profitable company in the world. And now Fink decides what governments and public corporations will do. He doesn't make decisions based on what's best for the consumer or citizen, or even for the company, but instead he pushes choices that benefit BlackRock's bottom line. But we've seen this kind of wealth disparity in human history before. And wealthy elites that get too greedy and feed their people nothing but desperation always lose power in the end, one way or another. But let me know in the comments, do you believe Larry Fink and BlackRock are actually good for this world, or are they gaining too much power?